It's March 31st, 2016, so I think it's a good idea to take a look back at the first quarter of the year and see what our portfolio is doing. This is our tech stocks portfolio, and just to remind you, this is what everything looked like on January 3rd, 2016, the first trading day of 2016. We bought all of these different stocks. We bought Apple, Angie's List, Activision, Etsy, GoPro, Microsoft, Netflix, Nintendo, Square, and Twitter. And we had, if we look on the ending column here, percentage change since purchase. So we've got some red, we've got some green, some good, some bad, but overall we had a 0.95% increase in the value of our portfolio. So let's take a look at what it's doing now, 3 months later, at the end of the first quarter in 2016. So here's our stocks again, and if we just want to cut to the chase and look at our percentage change since purchase, the final column here, not so good. A loss of 4.33%, which is $17.15. Now these are of course unrealized gains, so that means we're not losing $17 until we actually sell our shares. But let's take a look what happened here. So something's weighing us down. I'm going to change the column ordering like this. Let's look at the bad, then the good. GoPro. GoPro has really let us down. It's lost 36% of its value since the beginning of the year, 3 months ago. Twitter has not been able to recuperate, and it's dragging us down, 26% loss. Angie's List has been pretty volatile, and so far it's down 11.61%. Activision, this is a little surprising for me at the moment. They were doing so well at the beginning of the year, and now they're down 10%. Netflix is also surprising. They're down 7%. So it looks like half of our stocks are in the red and half of them are in the green. Let's look at some good news. Microsoft has gained us 0.78% of its value. Nintendo has done well also, increase of 2.90%. Apple, even better at 3.46%. Etsy has started to perhaps turn the corner, and we're at 5.58%. And Square, a whopping 25.66% increase in value since our purchase on the first day of the trading year. And here is our 401k portfolio full of these mutual funds. Now watch the previous episode about why we chose these Vanguard funds. Basically, this is what our portfolio looked like on the first trading day of 2016. And these negative values here reflect what did the portfolio do compared to the previous year. So you see these numbers were negative. There was a bit of a loss, but the time period that we were looking at wasn't long enough to really get a good sense of things. Let's take a moment to look at what are our mutual funds doing now that we've progressed 1 quarter into 2016. You might have heard that there was a lot of financial instability at the end of 2015 and at the beginning of 2016. Is it over yet? Who knows? If I knew that, I'd be rich. But let's see what we can discern based on our portfolio. This is what the portfolio currently looks like. And if we look, just cutting down to the chase here, 0.44% increase since purchase. So if we bought these funds at the beginning of 2016, the first trading day, so far we're up 44%, which is a whopping 32 cents. But at least we've got some positive numbers compared to the previous time period. So let's compare in some hard numbers how far we've gone. So VBTLX was 1064 and now it's 1088. VITSX was 5088 and now it's 5109. And VTMNX was 1183 and now it's 1162. So there's that bit of that loss there that happened. But besides that, positive increases since our purchase time. Let's look at our ETFs portfolio. If you recall, this is our portfolio at the start of 2016. So our portfolio consists of these Vanguard ETFs. Go back and watch the previous videos about why we chose these. But here's how we were doing at the start of 2016 based on our purchases of these ETFs in 2015. So if we held on to all of these ETFs through 2015, we basically had a loss of 3.52%. And that all came from the end of the year 2015, actually, with a lot of volatility. Well, we're in 2016 now. Let's see how we're doing. Here's my current portfolio as of this moment. So if we compare what was our portfolio doing last year, we were in the red, and now this year, so far, we're in the green. Now, obviously, 3 months is not long enough to really get a sense of how this is doing, but positive news creates positive results. So let's see, just on today's gains and losses, pretty much all of our ETFs had a little bit of a loss, a few cents. VYM had the biggest loss, 16 cents. But since purchase, we've gained $3 off of that, which is a 4.69% increase. VTI had a loss of 12 cents, but since purchase 3 months ago, we've increased our holdings 2%. VTI had a one-day loss of 3 cents, but since purchase, we've gained $1.04 or 1.84%. And BND had a good day, 14-cent increase, and in the grander scheme of things, in 1 quarter, it's been a gain of 2.53%. So also looking at things this way, just on the values, we see that 3 months ago BND was $80.75, now it's $82.79. VT was $56.65, now it's $57.69. VTI was $102.74, now it's $104.82. And VYM was $65.95, and now it's $69.04. So there you go. We are definitely on the right track so far in 2016. Keep holding these ETFs, and we'll check back in the next quarter to see how it's all going. This has been Victor Campos for the VMC Inc. Financial News Network. Next time.